Let me welcome our guest to today's show. Ali Khan Sashu is the CEO and founder at Rich Frontiers Management in Nairobi, Kenya. Good morning, Ali. Thanks for coming through on the show. Ayodeji Ebro is a trader and CEO at Afrinvest Securities. Is here in Lagos to cover the Nigeria and the West African markets for us. Ayodeji Ebro, good morning. Welcome to the program. And also to bring some perspectives into the conversation as well is Uchenna Minis, who is a trader, is an FX trader and the managing partner at Blue FX Nigeria. Thank you, gentlemen. Let's get this Friday started. I know the big story is around crude oil prices. Nigerian authorities will be smiling now. Brent crude heading towards $41 a barrel a few minutes ago. But again, there's still a lot of work to do when it comes to balancing the books for Africa's biggest and most populous economy. The OPEC meeting is now effectively tomorrow morning, Saturday. So I'm sure we'll all be sitting back at home tomorrow and watching this very critically. Uche will weigh in a bit of that, as well as the currency conversation with the Naira, also with the US dollar, making some strong showing in the week we're finishing today. But let's look at some of the Africa's equities markets closing yesterday. Egypt and the BRVM in Ivory Coast were the star performer, followed by the Kenyan market, the Nairobi Securities Exchange. You can see that on your TV screen, the Egyptian market was up 1.89%. That was a big jump for the biggest market north of the continent. In West Africa, the BRVM, the regional exchange, was 1.55%, beating Nigeria, a much bigger market, which was down 0.38% on some profit taking. Ayodeji will bring us up to speed on that. Meantime, South Africa also, just as Nigeria, went into the negative territory, 0.82%. A very quick recap of some of the 5 biggest markets on the African continent. So let's get on to look at the East Africa, where a number of economic data are coming through from Kenya and Uganda. Surprising manufacturing data, PMI reading positive more than anyone. Just a surprising move there. The PMI for Kenya was up, was reading 36, where the Ugandan PMI was about 41. So let's just get Ali in Nairobi to speak to us on this. Ali Khan, what's driving this PMI? We all thought that the impact of COVID-19 would be negative on manufacturing data, or is it too early to celebrate?
So I think that was a upside surprise, both in the case of Kenya, 36.7, and Uganda, 41.9. But bear in mind, if it's less than 50, it means that the sector is contracting. So it's the level of contraction that we're looking at was not as grim as some people might have expected. And in fact, in Uganda's case, was considerably better, higher than 40, 41.9. So both of those numbers give us some room for optimism that it's going to be a bit of a flatter pullback than some people would have predicted. So let's see what happens going forward, because the shutdown became stricter later than these data points. If I could just touch on a few other issues from a political standpoint, Burundi, the court threw out the opposition's application to have the election annulled, but bear in mind there have been strong rumors that both the previous president, his wife is in hospital with COVID here in Nairobi, and 7 cabinet members apparently currently have COVID. Kenya, Tanzania, there's been quite a spat. President Magufuli in a short video was quoted being very aggressive, complaining about the fact that Kenya is not respecting COVID certificates from the Tanzanian side, and saying they should be increasing prices on goods coming into Kenya. We're dependent on a lot of perishable goods that come over the border. Briefly, just to touch on a couple of other economic news, we spoke about the Norfolk Hotel, which is a very famous 100-year-old hotel here in Nairobi. It was owned once by Tiny Roland, the very infamous Tiny Roland, then by Prince Waleed, and apparently it's been sold recently to a Nepalese investor. And then if I can just touch on Kenya Commercial Bank, the biggest bank in the East African region, has announced that it's restructured a total of $1.2 billion of its loan portfolio, to give you a sense of the scale of what we're dealing with. And then finally, I just wanted to touch on the Eurobond market from this side of the world. I was looking through some data points, Boyson. Did you know Zambia, which has less than $1 billion of reserves, Eurobonds have returned 40% in the last 4 weeks. Angola, which is restructuring its loan portfolio right now, has returned 78% in the last 4 weeks. And I think that really speaks to the spillover of bullishness coming out of the printing press in America and finally has got to our shores. So it'd be interesting to see whether this momentum builds up even more. And just to touch on, the best performing asset class in the world in the last 4 weeks has been sub-Saharan African sovereign bonds.
Yes, it's surprising when you look at this, a bit of a comeback of the animal spirit when you talk about pushing the virus aside and folks believe, let's reopen the economy, the market is leading from the front and Africa is taking the center stage. That's a good one for Frontier Africa. But we'll talk about Islamic financing in Kenya, which is the new thinking on the streets there in a bit while. So let me just ask Ayode Jebo very quickly to talk to us a little bit about some of the other big stories. Let's talk about Nigeria, but quickly let me just welcome Luke Fujebe, who is the team lead equity at Vetiva Capital. Luke, good morning. Welcome to the conversation.
Good morning, Watson.
Thank you. It's good to have you on the Frontier Opening Bell. So let's talk about Nigeria a little bit. The market, the equity market. The equity market softened 0.38% yesterday on the day that the Central Bank of Nigeria conducted a massive treasury bills auction, oversubscribed north of 200%. Ayode Jebo, I come in here. Let's start from the fixed income side for Nigeria with this over-aggressive appetite by investors in Nigeria and overseas into this regular auction by the central bank with the size of the liquidity that we have on the market street. Ayodeji.
It was very interesting within the fixed income market. When you look at the OMO auction, we saw significant interest. And we would like to trace it to maybe some of the foreign investors that have their funds currently trapped. So rather than continue to wait and continue to wait with the fund being idle until when they get FX, I think a lot of them are trying to plow back that funds into the OMO auction market. We saw a drastic decline in the short term, the 82-day investment yesterday, and closed around 4.95%, which it's very surprising because when you check where the rates were also coming from as high as 7%. So within the OMO market now, we have most of the bills in single digits, and the interest has been overwhelming. But we don't think that is really attributable to the, maybe let's say, organic interest. It's just based on most of the investors don't have options for them to take a position. And coming to the equities market, well, what we saw yesterday is also expected. We saw some form of profit taking, and was mild. Market close 40 basis points down, which it's expected on the back of declines in MTN, GT Bank, and Zenith. We feel that we may see a pickup today in that market because a lot of investors are still waiting on the sideline, trying to just be cautious regarding the rate at which the entry points. we feel that with the sustained oil prices at above $40, which is positive for Nigeria, the economy, the reopening of the economy partially has also been sustained, and that would increase activity within the market. So in terms of projection of even the recession that we're expecting may not be as deep as expected. If we see major policy, the government can also drive policy significantly, and we would see that improvement, and that would really help regarding most of the quoted companies, as well as the productivity in the Nigerian economy.
Thank you, Jebo. Luke Ofojebe at Vecheba Capital. The story overnight had to do with the PPPRA, that's the Petrol Pricing Regulatory Agency, talking about Nigeria now moving into this new template for petrol pricing at the pump. So, what's your take? What will this mean, this new horizon? What do you think it would mean for the listed oil marketing companies on the Nigerian Stock Exchange?
Yeah, so this is actually a good development in the downstream sector, especially for the oil marketers, because prior to now, since 2017, when the Naira was devalued, the oil marketers had to leave the importation of PMS into the hands of the NNPC due to on economical FX differentials. So margins actually compressed in 2017, and it has been the case since then till late 2019. But given this development now, it means that the oil marketers can start importing independently and sell at market-determined prices. So, of course, we should be seeing improvement in margins. And even before this was declared, the intention of the government was that they will be reviewing the prices of PMS monthly in such a way that the prices will mirror what's happening in the international market. But given the slump in oil prices, the expectation is that we might not even see PMS price even rising to 145 Naira if market forces were to act freely. And that's why the government just decided to allow market forces to determine the price of PMS here in Nigeria. So going forward, we think
crude oil is heading back now. It's about $41 a barrel now. So what does that make? Does that still make sense with this reduction in prices that has been announced recently from 145 to 123, 125 or so?
Yes, it is. It still makes sense because really for PMS price to get to the neighborhood of about 145, 150, we need to see oil prices at close to $60, $65 per barrel. And the reality is that we can't really get to that this year, and next year is not looking like it because, I mean, we expect recoveries in oil demand due to the fact that a number of countries all over the world have started relaxing their lockdown measures. So over the next couple of quarters, we expect demand to improve. But of course, we don't expect demand to get to pre-COVID-19 levels because the thing is that a number of companies are now actually adopting this work from home policy, and it could be the new normal for a number of companies. So that means that demand for petroleum products will still remain subdued when you try to compare it with what it was before the COVID-19 levels. So on that basis, going by our expectation at Betiva, we actually see Brent prices, which is the benchmark against Nigerian crude. We see it averaging about $42 in the third quarter. Then in the fourth quarter, we see it averaging about $45. So that takes our average for the year to about $41. And that translates to average PMS price of about, in the international market, of about 80 to 90 Naira per liter. So this is still a good one for the oil marketers. So in terms of what we should expect, the impact on the oil marketers, margins will improve, earnings will surge significantly. So it's just going to be similar to what we saw in 2015 when PMS price was raised to 145. A number of these companies actually recorded significant growth in their bottom line. So we think the same thing will happen this time around. However, how the different players react to this positive improvement is actually dependent on their peculiar challenges. For a company like Total, for instance, which is heavily exposed to debt, so they might take this opportunity to actually pay down their debt. I mean, their cash flows will improve this year. So so they can take that opportunity to pay down their debt. Then for a company like Adova, formerly known as Oil PLC, the strategy for the company really is to actually grow its footprint in the downstream segment. So this is also an opportunity for them to further expand their retail network across Nigeria. We've seen what the firm has been doing since 2019, and we expect that going forward.
Look, thank you so much. Let's ask Uche how much of his time he spent watching television, trying to follow the folks in Vienna as far as the OPEC meeting and the big bats between the big boys. Now it looks like Saudi Arabia and Russia are on one side, Nigeria, Iraq, and the rest of the oil producers are on the other side. So, Uche, quickly here, $41 a barrel. It looks good for Nigeria. It looks good for also Angola and Zambia that Ali mentioned earlier about their FX reserves. I'm sure Nigeria's own central bank governor, Godwin Emefiele, will be smiling right now, at least having a bit of a breather. So, talk to us about how much does this all weigh in for the market so far this week?
Boston, it has been a very rosy, should I say, overall bullish sentiment in the market. And I think a lot of other aspects of global markets are suddenly also benefiting from that bullish sentiment. But Boston, I'm going to say something very shocking, and I know a lot of people are not going to sort of believe it, but I'm still expecting a leg lower in oil prices. And I think Lucas mentioned that they are looking at 41 average price. I'm actually looking at $20 on the average price towards the end of the year. I think this is where we are in terms of there is that misplaced, should I say, detachment from actual underlying macroeconomic conditions. And a lot of market participants are starting to front run this week to join into a possible bullish wave momentum, thinking about the possibility that economies are not going to go back to where it is that we have bottomed out. But what I'm saying now is we are just running on the possibility of the fear of missing out, the FOMO, should I say concept. So OPEC's deal, I think right now with oil prices rebounding, I think there will be a lot of relaxation, a lot of under compliance, because all the market member countries will actually see the need to sort of not miss their production quota, Nigeria included, and other countries that are also struggling to keep production at that quota that OPEC has set for them. Saudi Arabia, as I mentioned, UAE and Kuwait, and also highlighted that they will not continue the voluntary cut production of 1.18 million barrels per day, given the fact that they've gotten oil prices to a level that they think is comfortable. But I think we are in a place whereby we are detaching ourselves from actual underlying macroeconomic conditions, and we are just hoping and working to trade for the best. But I think there should be that possibility of another leg lower.
Okay, thank you. That's a good one. A bit of a contrarian there with folks with look outlook for oil at the Tiba capital. Ali, let's talk about the Southern African markets a little bit. Some of what we have, the GSE yesterday dipped about a bit of about about 0.5% or thereabout. On the equity markets, but again, it was much bigger in the afternoon. What's your take on the Southern African market? I'm sure you can see the screen. First round shares down about 2.52% because of what is seen for its profit fall in 2020. This is one big bank within the South African space and one of the largest on the African continent. Zambian bureaus pulled the highest trading volume yesterday on the Lusaka Stock Exchange, very small market. Then you have the Botswana up 0.03. Coming here into the Southern African market for 1 minute, Ali.
So just to recap, you know, the JSE has had a stupendous rebound. I mean, if you want a definition of a V, just have a look at the Johannesburg Stock Exchange, which has rallied enormously since that very big sell-off. So I think, you know, this movement of profit taking was to be expected but had you timed it right, you would have made out like a bandit on that exchange. With respect to First Rand, this is a story across all the banks in South Africa. It started with the downgrade of the sovereign, which meant that all these banks were downgraded as well. The sovereign rating is the ceiling for banks, so that affected them. Plus, of course, you've had this significant lockdown and slowdown in South Africa and restructuring, and most banks are reporting earnings for the full year. They're expecting down about 20%. So I think you've had a little bit of market repricing as those results feed through. With respect to the breweries in Zambia, you know, people drink beer whether we've got a virus or not. So I think, you know, if you want a good defensive stock, it makes sense to be in the beer company. Unfortunately, here in Kenya, the big beer company, East African Breweries, has taken a significant markdown because the government, in their search for tax, are trying to put on a 35% excise duty on their fastest selling mass market product, which is made out of sorghum. And they invested $140 million in a brewery in Kisumu near the lake. And they're very unhappy with that development with the government. They did it before and it crashed sales, so it's quite interesting. But overall, you know, the old adage, BBC, beers, banking and cement, you can't go wrong with beer, even if we're being ravaged by a virus.
For my folks, I know for Ayodeji, Uchenna, and Luke as the team, I'm sure they know the Nigerian the brewery sector story so well. Excise duty is hurting some of their numbers. That's true, isn't it, Ayodeji?
Yes, I think beyond just the excise duty, the competition there is very steep, and there's a lot of price cuts. So for most of the companies playing within that space, they are not able to take they are not able to increase prices like you would have in the industrial goods space or the cement sector. So that has been stifling their growth, and I feel they need to come together, form what we may call like a cohesive oligopoly, agree on where to move their prices. Because sometimes when you talk to even some distributors, when they are giving them goods, they are benchmarking prices of their competitors to sell, not necessarily trying to look at what their own cost of production is. So that sector is currently still challenged. So with some of the cost pressures from excise duty, cost of operation, distribution, advertisements, has been telling a lot on that sector.
Okay, I don't want us to miss out on this as we try to wrap up. Islamic financing is a big story. I'm sure in North Africa, for markets like Egypt, Morocco, Islamic financing is big story. Nigeria has stepped into this a little bit. What's the new thinking here? 1 minute, Ali. What's the Kenyan authorities thinking about Islamic financing in this largest economy in East Africa?
So they've been thinking about it for a very long time. We've got a couple of Islamic banks here that are operating purely on the Sharia principle already. And for a long time, the government has been trying to issue a sukuk bond into the Gulf and Saudi Arabia, but they haven't done that yet. But I think they're putting in a lot more focus now on tapping into that. You know, as you said, the people who've tapped into it well are North Africa because of affinity, because of a socio connection. You're doing it much more now, and I think we're a little bit behind the curve. We have a big Muslim community. Local banks, Gulf Bank, and a couple of others have tapped into that First Community Bank, and I think the time is ripe for the Kenya government probably to go to the sukuk market as a sovereign first, and then look at specific, maybe infrastructure-led borrowing, specifically in the Islamic areas. Northern Kenya, very underdeveloped, but a lot of demand coming from the Islamic financial institutions ready to lend into that area. So that's where I think it will play out.
Okay, great. Luke, how are we doing with the sukuk bond currently on our market street? for this period?
So at the moment, like you said, you just want to know the trend of Islamic financing here in Nigeria. Looking at that segment, its penetration in the Nigerian market is still very much weak. I mean, the government has been doing all what it can to push it further to have more reach in Nigeria. But then again, when you try to compare its penetration relative to what other normal bonds are doing in the markets, you can actually tell that that segment is still at its infant stage. However, we are seeing a number of Islamic investors showing interest in that particular market segment. So all we just need the government to do is to continue to push for it more, and of course we'll continue to see patronage from our Islamic investors and also from other investors as well.
Okay, we're just touching on. Thank you, Luke. We're talking about North Africa. As we said yesterday, the Egyptian stock market was the star performer on the continent, close to 2%. So that was one big story from the Egyptian market. But of course, the central bank also did an auction of about 14 billion Egyptian pounds in treasury bills. That was yesterday. Of course, today is no trading day in Egypt. Today, Friday. According to the Minister of Planning for Egypt, the economic performance of the country is among the best so far during this pandemic period. We'll talk more about that on Monday. Of course, in other Frontier Africa news, Nigeria Stock Exchange today is talking about a green bond during a virtual meeting at 2:30 local time. We'll listen to this virtual forum and see how much of it we can learn. Then we'll talk about the green bonds. Nigeria has floated its own. Kenya has done a bit of that as well. South Africa as well. So folks, let's take it all green over the weekend. Then when we come back on Monday, we'll talk more about the green bonds flotation within the African marketplace. What does it really hold for? Is this a way to go in terms of deepening portfolio asset classes and all that for Nigeria? Then we'll have the full decisions of the OPEC ministerial meeting also on Saturday. So we have a lot to chew on Monday morning when we get back to Frontier Opening Bell. So thank you very much for being there this week for us, Luke, or not Jeffrey, or not, yes, or not Febe, who is thank you very much, who is the team lead in charge of equity research at Betiva Capital. Thank you very much. Uchenna Menis at Blue FX Nigeria. Thank you. Ayode Jebo, CEO at Afrinvest Securities, and of course, Ali Khan, Asacho, CEO and founder, Rich Frontiers Management in Nairobi, Kenya. Thank you, gentlemen. We appreciate your time this week. We'll see you again bright and early on Monday morning. Have a great weekend, everyone, and see you then.